we interviewed you last year around this time, about a year ago. Bitcoin had just crossed 100K for the first time. Today it's trading at 87K. Why did Bitcoin underperform?
Most people will be followers, but there's always going to be a leader. This is a battle for the future of money. In my opinion, we have the world's greatest product. The number one way to destroy or undermine your first idea for the 30 trillion is to come up with a second idea and get distracted. I want to look at the history of failure. It's alpha males that solved one thing and think that that's solved and done, and they come up with 10 more things to solve. The most important days of your life, the day you're born and the day you figure out why.
Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm Alex Thorne, head of firm-wide research at Galaxy, and we have a great episode for you this week. Phineas and I have just returned from Miami to interview Michael Saylor in his home. Wait till you see this set where we recorded. We're sitting in the Red Room at his house in Miami, and it's really a fascinating interview. I was frankly blown away by the evolution in Michael's thinking and how far beyond the other treasury companies' strategy really is, and how deep he's thinking about strategy's role in the future economy. It's not just a company buying Bitcoin and putting it on its balance sheet. I know you're going to enjoy this interview. And I thought he was characteristically extremely articulate. And I think we talked about AI. We talked about Bitcoin development. I think people who have been following the core versus knots debate in Bitcoin will find his answer on this very interesting. Also, quantum computing. Michael's a very classic optimist about things working out in Bitcoin's favor. But look, before we get into that interview, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin not zero. We have a great episode for you this week. Michael Saylor, chairman and founder of Strategy. Thank you so much for coming back on Galaxy Brains, Michael.
Yeah, thanks for having me.
Well, actually, thanks for having me and us in your home in Miami. It's been quite a ride this year. New all-time highs. Now, I mean, when we interviewed you last year around this time, about a year ago, Bitcoin had just crossed 100K for the first time. Today, it's trading at 87K. Why did Bitcoin underperform this year?
It's the world's greatest free market in capital, and 85% of the Bitcoin, notwithstanding all of the corporations that have been acquiring it that people talk about, BlackRock and Strategy get all the publicity, but 85% of the Bitcoin is held in crypto OG hands. We can't even identify them. And I talk to the traders, they say that, the derivatives market, the perpetual market drives this much more than spot, which means that $1.7 trillion worth of capital that can be 20x or 30x levered is held by people that we don't know. And so I think that that in the near term, their moods and their drivers drive this market. And I guess that's the beauty of free market capitalism. But I think that the more important point is the last 12 months have been probably the best 12 months in the history of the industry in terms of fundamentals. And it's profound what's happened since December.
What would you put at the top of the list there? I mean, I know we've had changes in regulatory environment, different types of institutional adoption. What stands out to you the most?
Well, let's tick off the highlights of the last 12 months. You have a universally supportive administration, a supportive head of the SEC, supportive head of the CFTC, supportive head of the Treasury, supportive president, supportive vice president. You have David Sachs, go out publicly and say, Bitcoin is a digital commodity, it's digital gold, it's an asset without an issuer. We recognize its special nature in the world, as a technology to propagate property rights and freedom. That happened in March of this year, right? People forget how that developed. We saw the spot Bitcoin ETFs get uncrippled. We had in-kind creates and redemptions. People can now swap their Bitcoin for IBIT type shares and borrow against them and then swap back. That was a big deal. We saw the onshore derivatives market for IBIT get uncrippled. It went from nothing to 10 billion. And then when they actually took the cuffs off, it went to 50 billion. That's a big deal. We saw guidance from the CFTC just last week. You can now trade spot crypto assets like Bitcoin on regulated commodities exchanges in the US. You'll see them start trading on the CME. We saw guidance that you could start to use Bitcoin as collateral, right? Crypto assets collateral against those derivatives contracts and trading contracts. That's a big deal. We just saw guidance from the SEC that it's possible for the DTC to tokenize their entire security portfolio. We're talking all the securities in the world moving on the DTC. And the fact that that guidance came from the SEC was a big deal. But the fact that the CEO of the DTC got on X and put out a video saying they're enthusiastic about that was a big deal. We saw favorable guidance come out of the IRS and Treasury that made the entire issue of unrealized capital gains tax on crypto assets go away. That's a big deal. We also saw the creation of the digital credit market. My company, started issuing digital credit instruments, and we did an IPO. I guess it's like late January, early February. Then we did a second, a third, a fourth, and a fifth. We did 5 IPOs of digital credit instruments, and that entire market went from nothing to $8 billion in 10 months. And we're pioneering this public digital credit market, but we also saw now an avalanche of conventional banks. We saw guidance, positive guidance from the OCC and the FDIC probably every 2 months. Yeah. For the year, like six salvos. And after the 6th salvo, we started to see the entire dam breaking and the banking industry thaw. And now, off the top of my head, I think we've seen pro-digital assets, pro-crypto, pro-Bitcoin announcements from Citi, Charles Schwab. Both have announced they're going to custody and extend credit on Bitcoin in the coming 6 months. We saw positive announcements from JP Morgan. We saw positive announcements from Bank of America. We saw positive activity from BNY Mellon. We saw, Standard Chartered Bank and PNC Bank both announce agreements with Coinbase, taking advantage of their crypto as a service to custody and handle and trade Bitcoin. I think we saw clear guidance from the OCC that it's okay for banks to handle, hold, and trade and custody crypto assets on the behalf of their customers, right? So 12 months ago, you could barely get a loan against IBIT, right, and you couldn't get any credit against BTC. At this point in time, I think I can count off the top of my head 8 different banks that are offering credit against IBIT, normally in the range of SOFR plus 50 basis points to SOFR plus 75 basis points. And we can see probably 4 banks or more that are starting to suggest they'll move on to start to issue credit against the underlying BTC in the coming year. So that really represents the formation of the credit networks on top of crypto assets. So public credit, banking credit, right? Those are big deals. We also saw the first credit rating. S&P gave us a credit rating this year, and that's for the first time ever. And, I remember when we announced we were buying Bitcoin for our balance sheet, our insurance company dropped us. We couldn't get D&O insurance.
Wow.
And we couldn't get it it was like 3 or 4 years, and they finally unwound that, so I'm not underwriting the D&O insurance for my own company anymore. So, that's a bit of a win. So insurance, I'm not saying we have full-throated insurance acceptance. We surely don't. But what we see, and I left out, the other obvious thing, which is we got fair value accounting.
Yeah.
right? It was impossible to recognize a gain in
Yeah.
a digital and asset investment until the year 2025. And I guess beyond that, I guess I would be remiss not to note that I guess 200 publicly traded companies put crypto assets of some sort on their balance sheet this year.
Yep.
And we went to 200 companies that have Bitcoin on their balance sheet. So, and I guess last point, my company I think we raised 23 or 24 billion dollars
Yeah.
this year.
Yeah. I think you bought more Bitcoin this year than any year.
Yeah, and so I think if I was looking at the industry fundamentals, right, and you remember what we were talking about a year ago, right? You couldn't have predicted any of these things. If I had predicted all this, you would have said you're being too optimistic, and
Right.
I don't think I would have been. I don't think I would have been ambitious, or aspirational enough to predict everything that happened. But I would say it's exceeded my expectations at a fundamental level across the board. We couldn't have a more favorable setup for global adoption and institutional adoption of digital assets in general. And by the way, I've been very Bitcoin centric here.
Of course.
If we went on and talked about digital securities, you had the head of the SEC saying we expect that all securities will be tokenized on chain. That crypto task force was a big deal. The head of the crypto task force taking over the CFTC is a big deal.
Yeah, Mike Selig, yeah.
Right. And I think the embrace and the success of digital currency, the stable coins, is a big deal.
Yep.
And I just got back from the Middle East, and I met with all the sovereigns and the banking regulators, and and all the digital assets innovators, and it couldn't be clearer to me that as enthusiastic as we are in the U.S. about digital assets at this point, they're just as enthusiastic, if not more enthusiastic. And so I think I think we end the year with just a lot of things to be grateful for in this industry.
With that setup, what will be that you think? I mean, that's so many things that if you'd seen one of those headlines 2-3 years ago, you'd see a 20% candle or something on Bitcoin price. Like, what will to be the catalyst then for next year with such a good setup? Is it just a matter of working through some of those, like you were talking about the free market, some of those OG sellers, or markets take time to change their tune? I mean, what's going to take us higher?
I think the drivers would be, my checklist would be, you watch the derivatives market and the way it forms, and that's the offshore derivatives market, the crypto native derivatives market, like, perpetuals, 20x perpetuals,
Yeah.
that forming onshore, that's a big deal. Cross margin, Bitcoin is collateral against derivatives in the United States on regulated exchange will be a big deal. So the formation of the commodities markets and the derivatives market and how we integrate regulated markets with offshore markets, I think that'll be a driver. I think the second driver will be the formation of the bank credit networks. When Bitcoin's 90,000 a coin and you're selling 450 coins a day into the market, that's like $40 million of natural supply.
Right.
And you worked it out, and it's like, what, 16 billion a year or something of supply available from the miners. So $16 billion is a year's supply. Every time a bank creates $16 billion of credit, that's 1 year's supply taken out of circulation. So we're now getting to the point where banks like Citi and Bank of America and JP Morgan and Wells Fargo or Schwab, any of those can create that entire $16 billion worth of credit in 12 months. So you're watching the formation of major credit networks, and you're looking at a $2 trillion asset class that's been unbanked.
Mm-hmm.
And so as you watch the formation of banking credit, and corporate credit instruments on top of that asset class, that's going to be a big driver. I think the growth of digital credit, public credit, like STRC, Stretch.
Yep.
It's a big driver because in theory, you've got $300 trillion of credit. If you look at the credit markets, bank credit pays you nothing. Treasury credit or money markets, they're paying you 50 basis points in Japan and 100 basis points in Europe and nothing in Switzerland and 370 basis points in the US, and it's probably headed south. Mm-hmm. Corporate credit, junk credit, private credit, mortgage-backed credit, municipal credit. These things are all indexed to the risk-free rates in all those nations. So you look at the traditional credit markets, most people, what they'd like is a bank account that pays them 8% with no duration, no delta, no credit risk, right? That's what they'd like. What they're getting is a bank account that pays them 0 or a money market that pays them 2%. And then they're reaching for yield. And they're reaching for yield by accepting credit risk from a junk bond issuer, or they're going to go buy a 20-year bond they don't want. Nobody wants a 20-year bond or a 10-year bond. What they want is just not to lose their money, right? So the existing credit markets have a lot of very awful choices for people. Either you've got to wait 30 years to get paid and take 30 years of inflation risk, or you've got to bet on some going out of business junk bond, uncollateralized issuer, right? Or you've got to accept nothing and be happy about it, right? And so digital credit is spreading through that market, and the promise of digital credit is, first and foremost, if you want to accept 5 or 10 vol, maybe you get to 10% dividend, right? You might get 10% dividend tax deferred. That's kind of the promise of an STRC.
Right.
But I think the profound idea, right? The big dream of everybody in the Bitcoin industry, everybody in crypto has always been fix the money, fix the world.
Right.
The profound idea is rebuild the entire world's monetary order on digital technology. So you start with this idea of digital assets, which offer the promise of, speed of light between 8 billion computers and 8 billion computers 1 million times an hour in self-custody on an Android phone, 24/7, 365 everywhere, right? That's the digital asset vision, and that applies to digital tokens, digital securities, digital commodities, digital currencies, right? That's what holds the entire digital industry together. And then the next piece of that is building a digital capital structure on top of a digital commodity. That's Bitcoin as store of value. And once you get digital capital, you start thinking the third idea is digital credit. What if I strip 90% of the risk and 90% of the vol off the digital capital by over-collateralizing it 10 to 1? Mm-hmm. What if you issue $1 of digital credit for every $10 of digital capital every year, right? And then the last mile is, what if we just build digital money? And by digital money, I mean, what if we strip the last 5 or 10 vol off the instrument and we make it 0 vol? And maybe instead of 10%, 10 vol, what if I get to 8% 0 vol or 7% 0 vol digital money? And that's the vision of a Bitcoin-backed stablecoin. Right. In the crypto industry. Like, what if I had a stable coin that paid you 8% backed by Bitcoin? I can't do that backed by sovereign capital. I can't do it with fiat credit. The best you'll ever get to there is 4% or 3%, the risk-free rate. But if I built it on digital capital that was appreciating, I could go to 8%. And I don't know what the magic number is, 8 or 7 or 6, but I think the magic number is 4% better than everything else.
Interesting.
So if you're getting 0 in Japan and someone gives you 4% in yen or 1% in euros, you get 5% in the euro or 3% in dollars, and you get to 7% in dollars. I think you've just created digital money, and it checks the box of, is it a medium of exchange? Yeah, sure it is, right? It's completely stable versus the world reserve currency or against whatever you're spending in, right? The euro, the yen. Mm-hmm. Is it a store of value? Well, at the point that you start to clip to 7-8%, you're actually tracking the true theoretical monetary inflation rate, and you're outperforming the CPI. So regardless of what you think of what the true natural inflation is, the general public will perceive it to be a store of value, right? And so now you've got unit account store of value, medium of exchange built on digital capital. And, how do you get there? Well, you take digital credit, a bit of digital credit like STRC, and then you mix that with currency equivalents, the stuff you put in a stable coin. I'm going to give you 1 month T-bills, 20% T-bills and cash equivalents, 80% credit, get to a blended rate of 9%.
Interesting.
Maybe layer on a currency reserve, a volatility reserve buffer of 10%. And you use that, to adjust for the 5 vol or the 10 vol that's in the digital credit instrument. You put shock absorbers, right, on the credit to create money. Now, if you do that, you can, any fund manager, right, anybody that knows how to run a money market fund or any active fund manager, private fund manager, public fund manager, anybody could do this. This is not rocket science. You take 100 million by 80 million of digital credit, 20 million of currency equivalents, layer $10 million of a cash reserve on it. And then every day at the end of the day, you draw down the reserve to hit the NAV, to get the NAV to be $1.
Right.
Right. And on days when the credit trades up, you replenish the reserve and you can continuously, fund the reserve with maybe you take 100 basis points off the top of the credit and you fund the reserve. Now, if you do that, you can create a stable coin. We can't call it a stable coin. You call it a money coin.
Yeah.
You create a digital money coin that has a NAV of $1. You get the approval of a digital assets regulator. And now you've just tokenized digital money.
Right.
And now you release that into the crypto ecosystem. And now you've got, something that competes with stable coins that pays you 8%.
It's pretty interesting. or you create an ETF. We have ETF money market funds. They have stable NAV. They pay you 4% or 3.8% or 3.5%, right? It's not a new idea. Vanguard, BlackRock, Bitwise. Yeah.
Anybody could create a digital money fund, but now the digital money fund is zero vol, stable NAV, $1 NAV, pays you 8, right? And you could even, the value added there is you convert the monthly dividend of, say, a stretch into a daily dividend.
Right.
You strip the vol, then you get the regulatory approval. You put it on the platform, right? And now you're circulating on the ETF rails. That's digital money fund. But the most ambitious idea, which it's like the heavens opened for me this year, and I just like click, click, click. A year ago I didn't see digital credit, and and so if you don't see digital credit, you can't see digital money. But now what I realized is you go to a bank and you create a digital money account. You get the approval of your banking regulator to offer a digital money account, zero vol, powered by digital capital and digital credit, right? And now you just put your money in a digital money account and you get paid 8% daily on the banking system, right? And Barclays or B of A or JP Morgan or Morgan Stanley or, First Bank of Abu Dhabi or Emirates Bank, or fill in your favorite bank, would they do that? I think in the UAE or the USA, you actually have pro-digital assets banking regulators, right? If you have pro-digital assets crypto regulators, check. If you have pro-digital asset security regulators, check. And if you have pro-digital assets banking regulators, check. That won't happen everywhere. But the question is, will it happen anywhere? Because you want to be the digital banking center of the 21st century. The big idea is my bank offers a digital money account and we pay 400 basis points more than every other bank on earth. And then you're not talking about crypto billionaires wiring you billions of dollars. You're talking about fiat billionaires. You're talking about everybody.
And then that goes back into the digital money coin stack. Does that eventually flow into Bitcoin itself?
You buy $10 billion of digital money from your bank, and $8 billion flows into digital credit, and that $8 billion goes into digital capital, and that goes into Bitcoin.
Interesting.
Right? And there's no reason. I mean, what's the market? There's $200 trillion.
Yeah.
Right? There's $200 trillion of bank credit, money market credit, and corporate, type investment credit, and it's all yielding 200 basis points
What does
on
this
average.
do, though, for the ability of sovereigns to issue debt to fund their governments? Surely I wouldn't want to buy the, 1, 2, 10-year treasury if I could buy this.
If you're in the UAE, aren't you really thinking that my bank offers these bank accounts and foreigners wire me $20 trillion to my bank?
It's good for them, but is it good for
the point is it's good.
Yeah.
It's good for the people that do it.
That's right.
Well, like you're asking the question, if I invent coal fusion and I have unlimited free electricity, is that bad for people
oil
that sell expensive oil?
Yeah.
Yeah.
Right.
But it's good for the people that create the unlimited free electricity.
So then
we're talking about the digital transformation of the credit markets. If we offer digital credit that's 5x over collateralized that pays 10% dividends, what's that do for the junk bond issuers that want to pay you 5% uncollateralized?
Right.
Well, look, here's the good news. The world doesn't rationalize overnight. If I gave you, the perfect situation, it still takes a decade before 10% of the world discovers the perfect thing.
So there's time for debt issuers, whether sovereigns or corporates,
This is going to take place over 20 years.
to adapt.
Right? It's the world's going to gradually adapt.
So you amassed this treasury of Bitcoin. Now you've been issuing these digital credit instruments, Stretch, Stride, Strive.
Yeah.
So that's the middle part of the stack to the digital money coin you're talking about. Is Strategy going to take steps? Are you taking steps to issue this money coin, or is it something that you envision, as you've described, that an asset manager or a bank might issue using your credit?
The way I see the industry evolving is there's 3 layers. There's digital capital, there's digital credit, and there's digital money.
Yeah.
Okay? Our company, Strategy, we exist to create the digital credit. In essence, the whole mission of the company is to convert capital into credit. I think it's reasonable for us to strip 80 to 90% of the risk and 80 to 90% of the volatility off of the capital, right? If you're being very simplistic, right? I mean, I start with $10 of Bitcoin, I issue $1 of credit, right? So we can step it down from a 50 vol, 50 ARR asset and turn it into a 10 vol, 10 ARR, right? A 10% dividend yield. We can't create digital capital, right? I mean, that's the world, right? You need 700 million people in the crypto industry, and you need all of the decentralized holders and the people we don't know and the people we know and all the buyers. And it goes without saying, it's an asset without an issuer. We're the beneficiary. It's very clear to me, right? I can buy $1 billion a week for the past 2 weeks. The price isn't paying attention to what I'm doing, right? And that's good. That's a good thing, right? It wouldn't be a stable digital capital network if anybody could influence it, right? And so the digital capital layer is a global phenomenon that's been running since Satoshi, dropped the white paper, and it will keep running, and there will always be actors entering the space. The CFTC, the SEC, the BlackRocks, the Vanguards, the JP Morgans. I mean, they're all players in this space, the foreigners, the people you don't know. Didn't we just hear the Chinese shut down a bunch of Bitcoin miners?
Saw that yet again.
They banned Bitcoin mining for the 6th time in 12 years?
That's right.
Seems like every 2 years or 3 years they shut it down, but it just doesn't go away now, does it? So digital capital is a global phenomenon. We are beneficiaries, and we acknowledge that. And we build our company on that. Our job is converted to digital credit. And I think that's the one thing we can do well. And if you want to create digital credit, You need to be monomaniacally focused on digital capital. And, for every $10 of Bitcoin I hold on my balance sheet, I can probably create $1 of credit. You might even say, if you're being concerned, per year, by the way, you might say for every $10 of equity capital, I can probably create $1 of credit per year, right? And I can do that responsibly. And so over time, Bitcoin's growing. We're layering on more credit. We're feeding the digital capital ecosystem. We're building our balance sheet, et cetera. But now that third step, creating digital money, you need the crypto entrepreneurs, you need the crypto exchanges, maybe you need the Binances, you need the Coinbases, maybe you need the proof of stake chains, maybe you need the crypto, how many different entrepreneurs have created a stable coin?
Yeah.
Right? You need them. You need fund managers, right? You need the private fund managers, the Bloomberg jockeys. Like, I got hit with, $150 million of redemptions today. I'm going to sell down the currency equivalents. All of a sudden, I'm 95% credit, 5% currency. Now I have to rebalance back to 80% credit, 20% currency. I'm trading, I'm managing, I'm hedging. And so you need the fund managers. Then you need, you need the fund managers, either private or public managers, to actually create the digital money fund. Then you need a crypto entrepreneur to create a crypto coin. You need a public ETF manager to take your fund public. Right? A pretty big idea is I take private funds public. We forget, but the original tokenized fund was an ETF.
That's right.
Right? I mean, and believe it or not, the world's still full of a lot of asset classes that yet to be put on an ETF. Go try to buy an ETF that reflects a bunch of old masters' paintings.
Yeah.
Can't do it.
Right.
Try to buy an ETF that reflects New York City real estate and passes you through a dividend which reflects the rents. I
don't know of one.
Yeah, but the point is there's a lot of financialization to be done on traditional ETF rails.
So we shouldn't be surprised that we're not there yet on Bitcoin rails. That's the 10 years, 20 years you're talking about.
Yeah, BlackRock's done, 1,000 ETFs, but they still haven't done, the 10 that I want.
Right.
Right?
Right.
And then, of course, you need the banks. Right. What's the value added of a bank? Well, okay, the bank first they got 10,000 salespeople. Then they have a brand. Then they get the banking regulator to approve it. Then you've got the platform, right? All sorts of platforms. Then you've got the account. You strip the vol. And then you dispense daily doses of dividends. You deal with the tax compliance, the legal compliance, the KYC compliance. Some dude wants to buy $10 billion of digital money, and believe it or not, if you're the first bank to offer digital money in the Middle East, and some guy wants to wire you $10 billion to buy it, you still have the AML, KYC, the compliance issue, and you got to jump through hoops to do it. So the way I see the industry evolving is the first layer is completely decentralized. The second layer, digital credit, is going to be created by companies like Strategy or MetaPlanet or Strive, right? A treasury company that's monomaniacally focused on creating digital credit instruments. And then the third layer is really up for grabs. There's 1,000 banks that could do it. There's 1,000 fund managers that can do it. There's 1,000 crypto investors or entrepreneurs that can do it. And the truth is they are all adding value, right? Whether it's technical, right? Do you have the technique to put it on the platform? Everybody's got a platform. We'll debate what's the right platform, right? There's going to be a big debate. Is it a crypto exchange? Is it a proof of stake network? Is it Aladdin that BlackRock runs?
Right.
Is it the in-house JP Morgan or Morgan Stanley or Goldman Sachs network? Is it a regulated digital exchange? There's, Europe has got one currency, 27 sets of regulators, 27 different exchanges, and 27 capital markets. And you're thinking you want to distribute there, right? So I think that the exciting thing for us is what we realized is our mission is create the digital credit, but we have an incredibly compelling partnership opportunity or a partnership proposal. If you're the most digital forward bank in Australia, you want to create digital money in Australia, I have a deal for you.
Interesting.
Right? If you're the most ambitious bank in the Middle East and you want to create digital money, well, the first bank that does it is going to attract $1 trillion of capital. Do you want to be that bank? Do you want to be that city-state? Right?
Yeah.
Some people, some city-states will miss it. You've got nations that are more concerned about losing control. They would rather shut down the technology because they're afraid it might be too useful. Right?
Yeah.
So you have some that won't move. You have some that don't even get it, right? They don't even notice it's happening. What is the digital asset thing anyway? What is this good for? And they're like digital beanie babies, right? And then you have some people that get it. It's like, oh, money moving at the speed of light, economic immortality, and maybe we can program it to think 1 billion times a second.